Hey everyone, welcome back to Crypto Cash. Thank you so much again for joining me here. I hope you're having a fantastic day. Let's take a look here at Bitcoin, see what's going on. Holy cow, a lot of destruction occurred yesterday. Bitcoin dominance ripped up high, and the price of Bitcoin came down along with altcoins. That's usually a recipe for disaster. Of course, while we were expecting altcoins to pull back at some point yesterday, because we saw some bearish divergences there, we were planning to short it, 98,000 for Bitcoin and perfect price points for a lot of other altcoins, but the price just never quite recovered and just dumped from there. So unfortunately, yesterday was a day filled with missed opportunities. Just kind of left it alone. No use trying to catch a falling knife. So just friendly advice, folks. If that happens again, it's okay to just stay on the sidelines and relax. And to those who probably got liquidated, I'm sure there's a good chunk of people that did. We actually triggered, we didn't trigger a stop loss. I closed a trade before it hit its stop loss essentially by a few percent, right? Minimize a little bit of loss there, but as soon as you start to see things landslide, it's best to just cut your losses and walk away. Really, just simple as that. It's easy to say now, of course. I know hindsight's 2020, but what we're going to do is we're going to talk a little bit about. There's a descending trend here. We're going to talk about. We're still a ways away from breaking free from it. That's probably going to be running concurrent in a lot of ways with our SMAs on the 4 hour, which we can see here, kind of holding here. So I'll clean up the charts later, of course, and post playout chart. The most important thing I think that is relevant to talk about here is all this liquidity down below. Okay, and again, folks, just to kind of preface, when you see this kind of liquidation to the downside, it's important to recognize that will probably get hit. Now, keep in mind, liquidity is a little bit different than liquidation. We'll look at liquidation here in a minute, but this is basically liquidity. Just kind of helps us understand that we had some massive candle wicks that didn't see a full correction, or more importantly, there's a lot of profits to be taken there. These are very similar in a lot of ways to fair value gaps, where the price moves up too fast or down too fast. In this case, it wicked down too quickly, and there's some heavy profits to be taken in this range because market makers got in right here. Okay, we're like wondering like, what the hell happened right here? Market makers like, yep, we did a good job. So they're generally going to be driving the price down to be able to secure all that profit. That's kind of the concept. Now, is that a guarantee? No, but it's a higher probability because we're in a descending trend. Okay, so just kind of heads up, that's what's going on there. We got some Bitcoin liquidation levels here. Let's pull that up. And for the most part, I want to say thanks again before we get started for just being an awesome part of my life. You know who you are. Just if you're new to the channel too, thanks again for watching. Do not forget to hit that like button. Of course, comment below if you get a chance. Always love to hear your thoughts on what you're planning to do here. But let's start with first of all, left hand side, last 7 days of liquidation. We can see there's still a pocket at about 94,000. Those are some late longs that jumped in there. And obviously, as per usual, 90 to 88,000. Those are super low leverage long positions. Okay, same thing here as well. We can recognize the monthly kind of basically gives us the same perspective. 90,000 and then 105,000. We're smack dab in the middle of those really large areas. So to keep it simple here, with us being kind of in the middle of some large liquidation ranges, anything could happen. Really, that's what it boils down to. So a lot of times you have to look at smaller time frames. Oops. Let's go ahead and pull up smaller time frames for the last 12 hours and just kind of see if this is indicative of anything there. So we take a look here. We can recognize we are closer to the lower price point there, 96.5, 96,000, and 95.5. Those should be the next targets there for the price action to pull back after it, kind of jumps up a little bit. And it may not jump up much. It probably already has maxed itself out. And we'll look on the charts to see what that could look like too. But just know 96.5 to 95 even. That's kind of like the next range of liquidation. If we take a look here, we can see folks have shifted bearish. Big surprise at this point here. Mostly been shorting ever since the price wicked down. So we have more shorts than longs in the market right now. We take a look at open interest. This just kind of gives us an indication of where people are interested the most. And we can see here locally, when the price dropped down, we get a lot of adding to their position at about 97,000. And then look at this here, 95 even. It comes from before and now. So again, it's no coincidence, folks, that we're seeing a lot of buying pressure at 95,000. That's essentially that key level support. Okay, so again, a short to 95K makes sense. Past that point, we don't really know just yet, but we've talked previously about 94.7, more specifically as that major point of control. There's a lot of reasons why this level is a heavy focus. But no surprise that we have the most amount of position here locally at that level when the price spent very little time there. Who do you think bought all that? Just food for thought, folks. Again, it's not people like you and I. It's a decent chance that we didn't get a chance to to get our orders filled in correctly, or to get in that long line. Either way you look at it here, quickly to recognize on the daily time frame, we're underneath the 20-day SMA for the first time in a very, very long time. Okay, so that doesn't mean we're just going to drop to zero, but that does imply that further downside makes more sense. Again, pending we don't close above it. So if you look at our point of control here, again, 97,700, that's kind of just that local range. We can recognize that that's at 0.5 fib level, so 97.5 is the new resistance. So if we close above that, it might be a different story altogether. But between now and then, it seems likely and probable we're going to close at or below 97.5. And if that is the case, of course, then shorts makes a lot more sense than taking it long. And it's not like just closing above the 20-day SMA is a big deal. It's just getting back up over that 97K resistance is the big deal. And if that doesn't happen, then of course we're going to see Bitcoin likely pull back. We can also see here as well, again, money flow index, while it's slowly trickling up, it's still below the RSI. As I mentioned previously, that's generally a unfavorable sign. We can see MACD is still diverging too, so there's a lot of reasons why taking a long position just makes very little sense. From a macro perspective, let's see if the 4-hour tells us anything different. I doubt it will, but let's see. We're under two of the most important moving averages, the 20 and the 50-day SMA. We can also recognize too that we are still under 50 on the RSI. Okay, as I mentioned yesterday, staying under 50 on the RSI is generally a bearish divergence, and you don't want to take a long into that until we close above. And once more, that kind of required us to close above like 90, 98, 99K at the time. And now I would say 97,000 is that key level resistance for us. Money flow index is still tapering off. Stochastic RSI swinging down. There's nothing here from a 4-hour perspective that tells us we want to take a long. Okay, hourly time frame is probably going to reflect the same thing. Yesterday we were below the cloud. Essentially, we were right here when I analyzed the charts yesterday. And I was hoping for the price just to recover up to this fair value gap at about 99K, maybe 98.5. And we were going to short from there. And of course, missed the boat. That's just, yesterday was a series of missed opportunities, right? And again, I'm trying to normalize that because it's super common, folks, that it's not like it's just kind of another day in the market, right? But again, I had a few shorts lined up, ready to rock and roll, and unfortunately we didn't even come close to that range. So that's just kind of how it goes. So I'm mentioning that so you understand that it happens to everybody. And at this point here, we're still below the cloud, lagging spends, free and clear the price action, conversion lines right there with the baseline, kind of letting us know it's maybe not the most optimal time to take a long or a short. But personally, with everything we see here so far, there's no reason to consider a long. We got to make sure that if you're taking longs, you keep your take profit targets tight, and you use super low leverage or no leverage at all. I wouldn't recommend leverage right now, honestly. We still got another 24 or 40 hours, in my personal opinion, before you should take a trade with confidence, as far as understanding the correlation between which altcoins are doing well compared to Bitcoin. So me personally, whenever I take a look at this here, it's like, okay, well, obviously some of the top tier coins, they're performing pretty poorly, conversely with Bitcoin, or running concurrent. And a lot of times, if you identify Bitcoin's going down, most altcoins are going to go down with it. So if you're going to consider a long today, I think you like losing money is pretty much what the bottom line is. Because again, if the price recovers for Bitcoin, that's one thing. I do recognize that we might see a slight increase here, just based on how Bitcoin normally recovers, but there's really no reason to take a long. Anyways, I'm not trying to beat a dead horse here, but the easy way to understand it is that 94.7 is still at support level. We haven't closed below that level, but I would say a short to that level makes a lot more sense. Or potentially a long at that range, because again, there's a chunk of support at that 95K range we've seen here so far. So we just got to kind of wait it out and play this smart here, folks. So I'll post a playout chart here shortly in our Twitter, Telegram, and Discord. My recommendation is just to wait another day or so before you take any trades. That's just a very conservative way to go, of course, but most people who bought that dip yesterday felt really good about their long positions, and most of those are in the red now. So I wouldn't, if you're going to be taking longs, just secure profits. That's all there is to it. All right. Thanks again so much for joining me here. Hope you have a good rest of your day. We'll see you in the next one. Take care.